Can you blame investors? I mean, it's a nervous time. It's highly partisan. There's a lot of all caps writing and loud noises being made across America on a variety of things. And by the way, a pandemic. Can you blame people for being a little bit quick on the trigger?
No, not at all, Brian. I mean, our clients are, exhausted by the news flow, what's happening, the latest tweets, the numbers that are coming out. They're been whipsawed by the fact that we had the lockdown, and then we saw the market spike back up. So it's been a crazy year, as we were talking about earlier. But we're looking at the fundamentals. If you look at earnings, you look at growth, synchronized global expansion, the deficits, the fiscal spending, we're still very much constructive on equities.
You are. What's the primary thesis behind that? Economy, stimulus, lack of stock? There is no alternative?
All of the above, but in particular, look at the IMF. You've followed the IMF as long as I have. Deficits don't matter anymore. It's a sea change when it comes to the deficit spending. So we're going to see more spending coming out of Washington, Brussels, you name it, for the next, say, 18, 24 months. It can be directed at healthcare, robotics, automation, 5G, renewables, solar. So we see opportunities because there's a big wave coming, and overlay that with the fact that CapEx spending by the private sector is also kicking in this post-pandemic world that we're moving into. So there's a lot of opportunity in and around that private-public sector investment surge that's underway.
What's the bear case, Joe? I know you are constructive, but if you had to flip it, I'm sure you get questions from clients and, colleagues. What's the bear case if you had to make it?
The bear case is twofold, is that COVID-19, not only there's a second wave, but it's more dramatic. It's out of control. And we have to lock down. I don't think we're going to lock down. Second wave, not a second lockdown. But if we let this run too hot for too long, and we have to take a hammer out again to lock down the global economy like we did March, April, that's number one. Number two, the vaccination doesn't come as quick as some people think. Maybe if we start pushing out the vaccination story to 22 just because of reality, then I think that weighs on the markets as well. So that's kind of everything else I think is in place to kind of muddle through, push through. But we have to come out of the pandemic, see clearly the light at the end of the tunnel.
We talked about stimulus. That means probably trillions more in debt. Any reason to own bonds at all? Anything?
Well, just that you need that balance in your portfolio, but you've got to be careful here in the fixed income market, no doubt about it. So yes, you have to have that component. You can get greater yield out of the dividend-paying stocks, but it's lower for longer is the mantra. So it leads you back to those kind of the dividend-paying large-cap U.S. stocks is where we see a lot of opportunity and safety.
Shepard Smith here. Thanks for watching CNBC on YouTube.